The Kingfisher oil fields development has evolved, reaching some significant milestones after CNOOC Uganda Limited and its joint venture partners signed the final investment decision. Land for the construction of different facilities was acquired and compensation was fully made. Cash and in-kind compensation, like resettlement houses for all families, were built and handed over to the project-affected persons. Construction commenced for different aspects of the project, leading to the development of facilities such as the camps, well pads, the central processing facility, and feeder lines, followed by the delivery of the rigs and installation. Spudding was done in January 2023. There have been promising drilling outcomes, with 7 wells drilled in pads 2 and 3. Drilling operations, coring and on-site works are continuing, achieving total footage of approximately 23,000 meters. Other noticeable activities include a base station and permanent camp, solar turbine transportation, EPC 3-tank erection work, and EPC 4 pipeline trenching. CNOOC will actively promote the LPG integration plan, which will gradually achieve the strategic transformation towards a green and low-carbon energy supplier. A camp integrated hydropower project has been set up, which will result in carbon dioxide emission reduction by 3,156 tons. CNOOC has continued to contribute to the Belt and Road, people-to-people exchanges, enhancing China-Africa friendship and promoting the building of a community with a shared future for mankind. CNOOC collaborates with various Ugandan universities to enhance graduate employment curriculum design and research. We have signed agreements with several institutions to support scientific research and develop talents in the oil and gas sector. CNOOC, in collaboration with 5 other Chinese companies on the Kingfisher project, spearheaded a drive that led to the donation of $500,000 to upgrade the infrastructure of the Entebbe Welfare School. This is the largest donation to education in Uganda.
On behalf of the Ministry of Education and Sport, I would like to extend my gratitude to CNOOC Uganda Limited and the contractors of Kingfisher oil fields for your commitment to the cause of vulnerable and challenged children.
CNOOC sponsors international scholarships, sending Ugandan students to study in China. Under this program, a total of 11 students have been sponsored and 8 have since graduated and are currently working in the oil and gas industry.
This scholarship to me is a dream true. I'd always wanted to receive a first-class education from a good school, and CNOOC has provided me with this opportunity. This once-in-a-lifetime opportunity.
CNOOC focuses on training and certification programs for skills needed in the oil and gas industry, which promotes local employment and strengthens Uganda's logistics and industrial capacity. Over 150 contractors, 3,000 individuals in various oil and gas skills. It collaborates with local vocational schools to provide welder training, contributing to.
They took the initiative to underdogs, and they want to put us some, thank them, and much we can give them, but maybe use the skills properly so that they can also feel they have done some impact in the Uganda we have now.
CNOOC Youth Employment Support Program has trained over 350 local youths in various vocational skills, improving their employability and living conditions. These trainings cover welding, heavy truck driving, heavy machinery operation, engineering construction, and other skills needed in the oil and gas field development, as well as driving, tailoring, and hairdressing, among others. CNOOC invests in projects to improve community living standards, such as providing clean drinking water to over 13,000 residents in Buhuka flats, carrying out medical camps and building resettlement houses with modern amenities for 56 households. We have also invested $620,000 in maintaining critical roads and enhancing public safety. Livelihood restoration programs include donating livestock and teaching scientific breeding methods. We also work closely with the Confucius Institute of Makerere University, supporting events like the Chinese Bridge Competition and the Sound in My Heart Chinese Song Competition. CNOOC also organizes activities to celebrate Chinese culture, such as the
Good morning once again. You are welcome to the CNOOC. what we really learn and the knowledge that we really get in various issues, like when it comes to taxation, when it comes to branding and marketing, when it comes to human resource, and a very good number of issues. Because if you are ready, you have the knowledge and you have the expertise, that's when you can really be in the oil and gas sector. So here today with us is a gentleman who will be teaching us about taxation, exemption, VAT, and very many other things. So I'll allow Mr. Senoga Robert from SRS. SRS is an audit firm that does tax audit and advisory when it comes to tax-related issues. So he will be taking us through a number of topics, and today he will the topics that those who attended yesterday discussed about taxation, why we need to tax, the importance of paying tax. We talked about payee, who is supposed to pay payee. We also talked about NSSF and the importance of NSSF to an employer and the employee. So, ladies and gentlemen, today we have yet a very interesting topic, which will be about VAT and related issues. So I'll let Mr. Senoga chip in and start immediately with his package that he has brought for us today. You are welcome, Mr. Senoga.
Thank you so much, Michael. I really appreciate this opportunity, and I would like to once again thank CNOOC for pulling this up for our SMEs and other people in the sector. The purpose of this is to re-emphasize the importance of compliance, so that the bidding process can really become easy for each and every person who needs to deal with the energy sector. So basically today we have 3 items on the package, so be ready for them. We're going to have income tax, value-added tax, or what we call VAT, or some countries call it sales tax, and then finally we are going to have what we call withholding tax. So that's going to be our package today, and we can start straight away with income tax, where we are going to start with the overview of income tax. So this overview, it really starts with what is income tax. Basically, income tax is tax on profits, or if you're employed, it's tax on your income you get as a person. So if you've not made any profits, this is not your tax head. But if you made profits, you're going to pay something to URA. So basically it's that. It's tax on your profits. So for a few exceptions we shall drill in, these days if you make losses for 6 years, you can pay some tax, but ideally it is meant for taxation of profits. And for resident companies, these are charged on income. They are charged on wide income. For example, if it's a Ugandan company, but it has investments in Kenya, Tanzania, UAE, and all that tax is aggregated and then charged at once. Then for foreign companies, this is charged for only income gotten in Uganda, for only income sourced in Uganda. And the rate is 30% for corporations, save for small businesses that use presumptive tax regimes. And for small businesses, for what government considers a small business is one that gets sales below 150 million. So if you're in that bracket, you are a small business taxpayer or a small business for Ugandan description. But for accountants are very much aware, there is a standard for SMEs. That one, it considers someone a company that earns revenue that is less than $10 million. So, but for Ugandan purposes, we are considering anything below 150 million. That is the small business. Yeah, so we shall go to presumptive tax income. Presumptive tax income, we shall begin again, what is a small business? So if you're earning between 10 to 150 million, you are a small business. Below 10, you are micro. You are a micro business. Okay? So we presume if you get 27,500 daily, that is the test. We are not talking of profits, but revenue. The amount of money you've gotten, if it is 27,500, you are a small business and you qualify for presumptive tax. Okay? Yeah. This is tax charged by small businesses. Who pays it? Taxpayers who own small businesses. However, just like any rule, it has exceptions or clauses that cross the first rule, that if you're earning below 150 million, you're a small business for tax purposes, so you therefore apply for this return. However, if you are a profession, you're not supposed to pay, you're not supposed to use this return, because we believe you have the knowledge to come up with books of accounts and come up with proper returns. So if you're a doctor, a lawyer, all those professionals, they are not supposed to pay. They are supposed to pay tax, but they're not supposed to use a presumptive tax rate. Okay? And then also this one, it has two brackets. If you're a presumptive taxpayer and you are capable of getting books of accounts, your tax regime depends on percentages. But if you can't make books of accounts, it is constant. It's a fixed rate. Okay? So that has to be taken note of. As I was telling you yesterday, you have to keep records. So if you do keep records, you can easily pay less tax regardless, even if you're a small taxpayer or you are not. Okay? So, kind of note, presumptive tax is a final tax. If you pay it, it is your final tax. No one is supposed to disturb you if you've paid this presumptive tax. However, note, no deductions or expenses are allowed in this regime. You only declare your sales, and it is what we use to calculate the percentages or various tax. Then there's no credit. There's no tax credits here. Don't say, I paid my withholding tax, now I have my credits, the ones I'm going to consume. No. Here, you have to pay tax as is. Then, depending, there is a percentages if you have records. If you don't have, they will use flat rates. Okay? And those rates are as displayed there. If you're getting less than 10 million, well and good, you are exempt. You are free to enjoy you're free to enjoy, you don't pay any tax. But if you get between 10 million and 30 million, you pay 0.4% of the excess of the 10 million. Remember, below 10 million, you are exempt. If you get between 30 million and 50 million, you start with paying 80 plus 0.5% of the excess over 30 million. Between 50 and 80, you pay 180 plus 0.6 of the amount that is above 50 million. And then between 80 to 150, you pay 360 plus 0.7 of the amount that is above 80 million. However, now the disadvantages will come in if you don't have records. Those ones, they have a flat rate of 80, 200, 400, and 900, depending on where you fail. So this basically helps small businesses to be compliant and get tax clearance certificates, as I was explaining yesterday. So this regime, we know we have small businesses and we need them to bid into the mainstream finance. So that regime is there to ensure that there is a bit of compliance and a taxpayer is ready. Then, save for exempt, now we go to the normal return taxpayers. So these ones allowed expenses, but those expenses, they have to be used in production of goods and services you are claiming for, okay? These should be used in production of goods and services. So they include depreciation, startup expenses, charitable donations. However, these have limits, which I'll draw into that.
Yeah.
Pension contribution and payments to directors. So the major allowance here, that is depreciation. Remember, the accountant calculates their depreciation, but a taxman has his own way of calculating depreciation. And he grouped items in 3 classes. Okay? Class 1, class 2, class 3. Class 1, they charge 40%. Those are computers and data handling equipment. Class 2, there is machinery used in farming, manufacturing, or mining. And then class 3, vehicles, office furniture, and all that. Previously, before, people who have been accountants for some time, they know we used to have 4 classes. But now amendments came in, now we have only 3 classes. Okay. Then we have industrial building allowance. This is for only industrial building. And you are allowed 5% per year for such investment. If you construct a commercial building, and you use it in production of goods, or that's where your offices are, you're allowed 5%. Okay? Don't charge the entire thing or use your own rates. Because the accountants and the taxman, they see things differently. So for them, they use those rates, and accountants use different rates. Yeah, we have what we call tax incentives. These are there to boost production and tax compliance. For example, if you're an exporter, for 10 years, you're exempt from tax. If and only if you produce 80%, 80% of this is subject to that condition. If you are dealing in scientific research, training, and mineral exploration, there's a 100% allowance in the year of expenditure. Okay? If you are importing plant and machinery, you're exempt from excise duty on those imports. Okay? Yeah. So another tax incentive, you are allowed 2% if your employees, 5% of them are people with disabilities. So these are incentives I would encourage our people to look at and take on. These incentives have been set, they are there, and they are supposed to be used when you get the right consultants at source, or you get the right knowledge, or you use the URA available data. Okay. So detailed tax deductions, we have what we call startup costs. If you incur costs when starting, costs like company registration, licenses, and all those that start up a company, you're allowed to consume the entire cost, but at 25% for 4 years. Don't consume the entire expense at once. It will be bounced back, and then you start getting issued with the taxman. Then the same applies to interest expenses. These are allowed deductions, But if you're in a group of companies and you are lending between yourselves, they charge, you are allowed only 30% for all the years until it gets done. So the problem with income tax, or the good thing with income tax, it has exceptions. Other significant items, we have what we call non-allowable deductions. For example, so non-business expenses and non-allowable deductions. Please don't include them in your return. If you go out or whatever, all those non-business expenses, private expenses, or capital nature expenses, they are not allowable deductions. Okay? So specific non-allowable deductions include life insurance premium, reserve fund appropriation, and certain security contributions. Then net losses. Yeah, yes, we know you can be making losses, but please reconsider. Credit for losses are for 7 years. After that, 50% deduction. So after the 7th year, you will be paying tax. Even if you're making losses or what, you'll be paying taxes. Then also bad debts, they allow deductions, but only and only if they have been incurred in the previous income and you've taken specific steps to get that money and it has failed. Okay? You have to have taken specific steps. Like, for example, you should have maybe written to your debtors that please pay us our money, or you've even gotten steps to even take people to court for collecting your taxes. Then we have charitable donations. Yeah. Like, you have a good heart, you donate. Okay? So you have to be careful that government only allows 5% of your net income. For example, if you made 10 million, you can't say I donated 10 million. No, they'll tell you no. You're only supposed to donate 5% of your 10 million. Okay? Yeah. This brings a lot of confusion. So as you're donating, keep your good heart in mind that some may be an add back when you are calculating taxes. Okay? This is critically important, because some people, we find some people put a lot of efforts in CSR and donations, and then they are right when you talk to them, they say we are helping Ugandans and all that. So why is government unkind to us? You understand? So that has to be taken good care of. Then we have typical exemptions. If you're in agro-processing or export activities, your income is exempt. Bujagali, incomes of circles, these are exempt until June 2027, and others. Yeah. Thank you so much for listening to me. If there's any questions, please.
It's been a very good lecture there.
Thank you.
We thank you, Mr. Senoga, for this lecture.
Thank you.
About income tax. Because I know very many people out there have heard about income tax, and so many taxes that we keep discussing. You know, since yesterday, there is a lot that we have really learned, and this online enterprise development program sponsored by CNOOC is very important, and it's being beneficial to very many SMEs out there. I know very many of you are watching us. Just continue sharing our live link. Share the link so that very many other people out there can really watch and benefit from this free online enterprise development program.
Sure.
Because it will really help you, especially you guys out there who are in the oil and gas sector, or those who really expect to do business in the oil and gas sector. CNOOC has done it for you. It's free of charge. I just encourage that you just tune tune in, get that live link, share it with your friends, share it all in all your WhatsApp groups, and let everyone learn. Let's learn together. So we've been learning about income tax, and there are quite some questions. You know, it is a very sensitive topic. It is a very sensitive topic, and very many people have asked questions here.
Sure.
And these are questions that really need very technical answers.
Sure.
And someone here, the very first question, someone was like, what is the standard? What is the standard corporate income tax rate in Uganda? We're looking at the standard income rate in Uganda. What is
the standard corporate tax rate is 30%.
so
Save
30%.
for presumptive taxpayers.
Okay.
Other than that, 30%.
Okay.
30% is left on the table. Yeah.
Okay,
Yeah,
that's fine. Then how is personal income tax calculated for individuals in Uganda? Personal income tax.
It depends. That, like what I told you about, if, for example, if you're professional and you're running that business as a sole proprietorship, so we shall use the other payee rates.
The payee rate.
Yes, for individuals. If you are a non-national, a non-resident, we shall use the non-resident individual rates. And if you're a resident, we shall use the resident individual rates. Okay? Yeah, because ideally, this is income tax. That is why an employee is charged that tax when they are getting income. So that is all income tax. So if you're doing business, it is the same thing that happens to your income.
Okay, now, what is the process? I really need to understand the process of filing income tax return.
Recently, there's been an amendment.
Yeah.
If your sales are above 500 million, supposed to go 6 services of professional accountant,
Appropriation account.
a professional accountant, to prepare your books first. After they have been prepared, you go to an auditor, a certified auditor.
Yeah.
Then they make for you books of accounts. That is if you're above 500 million. But if you are below 500 million and you are not a presumptive taxpayer, you can continue filing your returns the normal way as it has been. After you've prepared your books, as I told you, it all starts with bookkeeping.
Yeah.
So if for you are good at estimating, trouble will be on your side because you will never get out of URA offices. So after your books are set, you file a return.
Yeah.
There's a pre-designed template of where you fill your TIN, period, a balance sheet, income statement. Then you upload on the URA portal. After you've uploaded, you get a PRN informing you of what you're supposed to do.
Okay.
Yeah. But before you upload also, if you get professionals, they can show you the amount you're supposed to pay. And also, as I've been explaining, they are allowable and non-allowable expenses.
Yeah.
So if you have non-allowable expenses, don't waste time. Just add them back so that you can pay the right tax in the allowed time. For example, if for example you've incurred personal expenses worth 10 million,
Yeah.
just add them back, then you pay the right tax thereof, other than waiting for your right to come and start telling you, add us this money. There's because it will add you, it will give you penalties, penal tax, and then interest. So it is better you get professional people to look at really what you're submitting.
Yes.
Yeah.
So, do we have penalties for failing these returns?
Yeah, sure.
Late?
For example, if you fail to submit your return on time, you are charged 200 per month.
200,000 shillings.
Per month, 200,000 per month of being late. Each month 200. So if you take a year, those are 2.4 million.
Yeah.
Another year, 5. Another year, so that is one. Then we have interest
Interest.
on the penal tax. Like interest on the would-be tax.
Yeah.
Then things can even go to fines and penalties or imprisonment.
Oh, it even reaches as far as imprisonment.
Yes.
Okay. Then, what role do tax identification numbers play in income tax compliance?
I think you have your ID, an ID.
Yes.
So this is more like an ID to allow you communicate with the taxman. It pulls out all your history and the number of years you've been compliant.
Yeah.
So it is what you use to communicate with the taxman, and it is what you use to submit your returns. Pay these days, even if you're dealing with parastatals, they'll request you 14. So 18 is just that. By the way, that word is, people think it is TIN, maybe TIN, but it is tax identification number.
Yeah.
TIN, TIN. That's why sometimes they write it in capital letters.
Yeah.
It is an abbreviation for tax identification number. Yeah.
So is like this tax identification number kind of intelligence on our incomes, that every penny I get is being investigated, and the taxman really knows about it? Because does it track all my income that I bank in the bank, all the income that I get when it comes to business?
Really doesn't. But by the people mistake it as if it is spying on you.
Yeah.
Yet you are the person who has filed these returns. Or you work in an industry, and that industry we expect, for example, consultants, we expect you to have profits worth at least 40% of your revenues.
Yeah.
So, and for you have underdeclared. So they use search intelligence, then they give you a figure. Sometimes it can be corresponding with what you get, then you're like, these people are spying on me. No way, that's not true.
Okay.
Yeah.
Then, do we have taxes specifically for small businesses? Like,
Yes.
because we are talking about SMEs.
Yes.
These ones are basically small. Do we have
Yes.
specific taxes for them?
We have a specific tax regime called presumptive tax.
Yeah, the presumptive tax.
Yes, that is specifically for theirs. And it applies if you make less than 150 million. Above that, you are no longer a small taxpayer or an SME.
And then how do they know that I am now making over 150?
Because now, with the recent changes, this IFRS of this world,
Yeah, IFRS.
if you purchase more than 150, they will know.
You know, when you talk about IFRS, some people are scared about that statement, but it's okay. So you mean everything that you purchase, IFRS will track, and they will know that
They will know.
This gentleman, this SME has more than 150.
Yeah,
their
and also, if you supply goods to our sponsor CNOOC,
Yeah.
they just tip the taxman that without only 6% of this person's income.
Okay.
So the duty is on him now to declare what he has gotten. For example, they can withhold like 100 million. What is 6% of 100 million? So for you say, I only made 500 million. Forgetting that these people are already reporting you to the taxman that this person has an issue here and here. Yes. So also that withholding tax also causes issues.
So, how do non-Ugandans and Ugandans differ when it comes to tax?
Those ones differ from my introduction, where I started from. If you're non-Ugandan, you only pay income for only taxes, for only income in Uganda. Yeah. But if you're Ugandan, we collect all your taxes. Dubai, where. All of it is subject to tax.
Okay.
Yes.
Ladies and gentlemen, we are still on our training, the CNOOC online enterprise development program, which is basically here to train you on how to cope up with whatever you are supposed to do when it comes to dealing with CNOOC and other companies that are in the oil and gas sector, we are making sure that you learn the basics. You learn everything when it comes to tax. You learn everything when it comes
Maybe
to
also
marketing.
my emphasis.
When it comes to branding, yes?
My emphasis
Yeah.
is people should be aware of what we call business expenses
Yeah.
and non-business expenses.
Okay.
You find someone has paid fees for their children, then they put it in the return, like education expenses.
Okay.
So that's where now the trick is, especially for small businesses. They fail to differentiate between business expenses and personal expenses. So you have to be very careful when you're putting in these returns. If you prefer to show all your expenses, do what we call an add back. You identify those non-business expenses. For example, if your profit is 10 million, but you have non-business of 40 million, okay?
Yeah.
That means your income is 50 million for tax purposes, not the 10, okay? So you have to be very careful that if there are non-business expenses, add them back. Yeah.
Okay, so we are continuing with our online enterprise development program, and Mr. Senoga Robert here is educating us about a number of issues that are related with tax exemption, payee, and income tax. So today we have been tackling income tax. Very many of you don't really know this very well, but as an expert is going to be telling us more about this, because he has even talked about people who think when they pay school fees they have to file return. They include it in the returns that they file. When
Sure.
someone goes to the bar, they have to include that money in the expenses, and you know. So I think for today we will learn. I want you to ask as many questions as you can. As we continue, you can send in your questions down there in the comments on our YouTube. You can also share the YouTube link to everyone so that everyone has a chance to learn, because learning is very important. It is this learning that will help us gain and get something from the oil and gas sector. So, Mr. Senoga, I think let's go for the next topic. Let's go to the next topic. For those sending in comments, those sending in questions, I'll read your questions and the expert will respond to them.
Are there questions already for income tax? Because it is quite important.
We don't have questions, additional questions, but those were the questions that were available. But I'll continue asking you as many questions as possible. Let's just wait for them.
Thank you, because income tax is one of the pains and headache for business owners. Yeah. So our next presentation is going to go on value-added tax. Value-added tax. Whenever you add value, this tax comes in. Whenever you add value, this tax comes in.
So when you talk about value-added tax, you are doing like value addition.
Yeah, value addition.
Value addition. Everything that has value addition, there is a tax. Okay. Okay, it's okay. Now
Yeah, it's actually at each process of value addition, even if value has been added 10 times, all those stages, there is a certain VAT amount that's supposed to. For example, you get your goods maybe from China, put them in your shop. An wholesaler from Wandegea will take these goods. For you at your point, when you're saying that wholesaler, you pay VAT. That wholesaler also pays VAT. When a boutique person comes to that wholesaler and takes those goods maybe to Chanja, that person in Chanja will pay VAT. The final consumer will pay this VAT, and then this person remits. Okay? Remember, VAT is not your tax, just like payee. VAT is a tax on your consumer. Okay? It is not your tax. It is tax for your consumers. Okay?
So it is the consumers that pay this tax.
That is why there is always that problem. Why aren't you remitting? Because you are just an agent. Why don't you remit? Because it is the consumer's tax, not your.
Just like the way we go to supermarket and buy something and you see the tax.
Because for you've paid your 10,000, okay? It has everything. So it's the onus is on the other person to remit
the tax.
The tax. It is not. That is something we should also understand. Other countries call it sales tax because it comes about when you're selling. Some people call it sales tax.
So in simple terms, wherever you go to buy something, they'll be taxing you. Unknowingly.
Unknowingly.
Okay.
Yeah, now the other debate of indirect tax we had yesterday comes in now.
Okay.
Yes, so basically VAT is an indirect tax. Okay?
Yes.
It is charged on variable, on taxable supplies. The keyword here is taxable supply, and another one is at different stages in the value chain or distribution. Yeah. So people confuse value addition as to manufacturing, yet that's not the case. Just movement of goods from maybe one place to another, that's value add. Or you can even be in the same locality. I buy that phone from you at 1 million. Just in a second, I get someone, I sell it at 120. Okay, so that is also value addition. It is imposed on supplies of goods and services in Uganda only. Okay, supply of goods and services in Uganda. So you have what we call standard rated supplies. These ones, we charge them a standard rate of 18%. Okay, then you have zero rated supplies. The issue here is zero rated. It is considered a taxable supply, but at 0%. Okay, so in your return you have to include it that I have standard rated supplies, this one, I have zero rated, I have exempt. Exempt, no tax is attached. It is not a taxable supply.
Okay.
Are we together?
Yeah.
There's a bit of that confusion, but that's it. We have standard 18, 0%. Because mathematicians will never understand the 0%, but accountants do.
The 0%.
Yeah, then exempt.
Because for a layman, it is very hard to understand when you tell me, there is 0% on what you have bought. I'll of course think, why is this one even talking about 0%?
Yes,
if it doesn't exist, it doesn't exist.
Yeah,
a zero is a zero.
Yeah, but when you're capturing your return, there is that zero that.
Okay.
So the standard rated supplies are supply of business assets, equipment, furniture, or commercial vehicles, hiring or letting of goods for consideration. For example, if you're a company and you have maybe a projector, you want to give it out for people with conferences, you have to subject it to 18%. Goods taken for personal use. Again, here drawing goods for personal use, you'll be charged a VAT. Okay, because you are a final consumer.
Yeah.
So you will be charged.
So everything that I get home, I have to be charged
from your shop.
Yeah.
Please, you have to be charged.
Okay.
Commissions received. If you receive commission or given out, you have to charge VAT. Sales to staff or relatives. Don't give goods to your mom and they say, but she's my mom, she don't give birth to me, so I'm not supposed to charge. No, you have to charge.
You're supposed to charge?
Yes.
Like, for example, I'm not understanding this very well. Like, I go somewhere, buy something for my mom.
No, like if you are the owner of a shop.
I'm the owner of the shop.
Your mom comes and visits you.
Yeah.
Or like I'm a consultant, then I consult for my mom.
Yeah.
She has to, if she doesn't pay, at least she has to pay VAT.
Okay.
Or I have to additionally put that bill of VAT.
Yeah, and you say, mommy, you know there is nothing for free.
There's nothing for free, Katla, you see. I'm in a loss of 18%.
Okay.
Yes.
that is that is not according to the rules of natural justice.
That's what you say, okay?
Yeah. It's not according to the rules of natural justice that you say, yeah, this is my brother, you know, my brother has bought something from here. Maybe he has used my services, and I have to charge him that 18%.
Yeah, so that is why these institutions are there to change these acts. By the way, the tax acts are one of the most changing acts every year.
Yeah,
these have to change, and they are talked about in the budget. Yeah, so these changes can be forwarded. Then the legislators can look at it and then they change this. Yeah, but at this stage, our role, as I said, is telling you of how you can maneuver the journey.
okay.
Not to maybe select the type of vehicle you are going to use. No, the vehicle was selected already by Parliament and assented to by the big man in office. So ours is now to tell you. So the driver of this vehicle is your RA.
Yeah.
It's on the steering. So basically, consultants just give you comfort on how you're traveling, telling you tighten your seat belt, have some maybe juice when you are traveling. You understand? So basically, this is the logic of this. So something might be not sitting in well with you, but that is how it is. And there are processes and avenues of how we can change laws to benefit our natural justice you've been talking about. I come from a background where law is law. When it is set,
Yeah.
you have to abide until it is changed.
Okay.
Yeah. Then we have zero rated. Okay? Zero rated. So these we charge 0%. Okay? The zero rated, we have exports, sale of drugs. We have sale of drugs, supply of drugs, medicine manufactured in Uganda, cereals grown and milled in Uganda, educational materials, sanitary pads. Those ones are zero rated.
I think when you talk about zero rated, you need to put an emphasis on this. Zero rated as in they are not taxed at all. When you talk about zero rated.
For lack of a better word, I would say they are not taxed, but I don't want to say that because it has a category.
Okay.
This is taxed at zero. Okay? So it's a taxable supply at zero. Okay?
Taxed at zero.
Yes. But we have zero rated. These ones, what is the other word you are talking about? Not charged, something like that?
Yeah, it's not charged.
Now, there you are right to say it here.
Okay.
Those are medical supplies. If you go to your hospital, agricultural inputs, seeds, fertilizers, pesticides, hose, aircraft supplies. Those ones are zero rated. Okay.
So when I have my coffee, it is zero rated.
Yeah.
Okay.
However, if your coffee is milled or some value add, it goes back to zero rated.
Okay.
Okay.
I understand.
Yes. Then we have exempt supplies. Zero. Then we have financial services. That is why you see if you have a bank, if you have a bank account, then bank statement, you've never seen VAT there.
Yeah.
Insurance, reinsurance, health, medical and health services, imported drugs, medicines, all those ones are exempt. Those ones that are not charged. Yeah. Then oxygen cylinders, social services, all those ones. Yeah. Who's required to register? This is the master slide. Who's required to register? Businesses with taxable turnover exceeding 37.5 million in 3 months. So if you make 37.5, you just look for a nearby URA office, you register.
In 3 months?
If it's a new business or old business, whenever you see you're clocking 37.5, look for the man and register, because it's going to come for you.
How will he know that I have made this money?
Of course, now there are mechanisms. As I've told you, we have withholding tax that costs 6%.
Okay.
If we will report you that we have someone who is not compliant.
So they have quite a big role to play when it comes to understanding who is using this amount of money, who is spending this. So the tax man is always up and down.
He's always up and down. He's always up and down, looking for always.
Okay.
So any national, regional, local or public authority engaged in business activities is also supposed to register. Okay? However, if you miss out on the 37.5, you can, if a year clocks and you've made 150, supposed to have registered.
Yeah?
Yeah. So you look for the tax man and register.
When you make your 150 million in a year.
Yeah, you have to register. And nowadays they have started involuntary registration. They look in your return and you are that. Register you there.
But now let's say, for example, we have money lenders. I don't think these money lenders have registered anywhere.
Those are financial services.
Financial services. So for them, they are not taxed. Okay. But they get a lot of money. Because I'm very sure a money lender can get over 200 million in a year.
Yeah. So basically, the importance of tax is resource distribution and developing the economy. Some money lenders do that because they lend you money, then you put in your businesses, and the same applies to SACCOs. Their income is exempt. Yeah. So, but if there is a pain, you can always go right to Parliament, and then they look in your proposal.
Okay.
Because those proposals are always there. They share them with the accountants like 8 months before they are passed. So we are always in the know of what change is coming.
Okay.
Yeah. So people will ask, what happens when we fail to register? Knowingly, if you knowingly fail to register, there are fines up to 3 million or imprisonment for 6 years.
When you don't register for that?
When you knowingly fail to register. Okay?
Yeah.
Your fines up to 3 million or imprisonment. Otherwise, 1 million or imprisonment for up to 2 years. And the penalty tax of double the VAT payable during the unregistered period.
Okay.
Yeah. Then these are important slides. So then, since we are talking over taxes, and for people who are going to supply oil companies, oil and gas companies, we have a special tax regime called deemed VAT. So it is, whenever you supply them, it is deemed as if VAT is paid. Okay? They don't give you that money for the VAT amount.
Yeah.
Because it's like deemed as paid. So it is the only special thing with the taxes in oil and gas. Okay? So when you supply them, be in the know. Yeah. So then we have penalties for tax non-compliance. These ones I've talked about them. Yeah. Then I have a simple illustration. I don't know if it can be easily seen. Yeah, assume this is now the icebreaker.
Yeah.
In case you're buying from a VAT registered person, okay? You've purchased at 10,000. You sell at 15,000. That means the amount on which you're going to pay VAT is only 5,000. Okay? But if you purchase from non-VAT registered person, you will pay a lot of tax because it has zero input. Remember, this is an input-output equation. If your input is zero, your output is going to balloon, and then the VAT cost become a major problem, and you start defaulting on this, and then you get penalties. Okay? So, or it is advisable you get your supplies from VAT registered persons. Okay? Yeah, that's it. Thank you. I think that is it for VAT. I'll entertain questions, then we move.
For those that have been following, I request that you send in your questions. I'm trying to look at the comment section. And for those that have questions, please send in your questions. But first of all, I want you to put emphasis on this. What is the current VAT rate in Uganda?
Current VAT rate, the standard for standard rated supplies, it is 18%.
So it is 18%.
For a layman, we can say it is 18%.
Okay. You have talked about the goods and the services that are exempted. Let's now talk about, like, what happens in the oil and gas sector. Just bring in a few goods and services, like those ones that we have around that sector that are exempted.
We don't make laws for different sectors.
Yeah.
Or special laws for special kind of organization. So these basically remain as I have displayed them. If you're supplying drugs, regardless, it is an oil and gas sector or what. So it is basically standard. The only difference is when you're supplying to an oil and gas company, they have that deemed VAT special regime.
Okay.
Yeah.
Okay. Then how is VAT calculated on sales?
Yeah, VAT is calculated by adding 18%.
You just add 18%.
Yes. However, it is important that you also get from a VAT registered person. Otherwise, if you don't do it, everything is going to be on your head.
Okay.
Okay? So you have to get from a VAT registered person for you to be safe. Otherwise, as I've shown you the example, if you sell at 15,000, if you get it from a non-VAT, you pay 2,200 as VAT to the taxman. But if you get it from a VAT registered person, you will only pay 300 or 400 as VAT. So you have to be very careful of where you buy from.
Then which documentations are required for VAT?
Nowadays it's a IFRS invoice.
IFRS invoice.
IFRS invoice.
So if you don't have the IFRS invoice,
so if you register for VAT, you have to produce IFRS invoices.
That is kind of technical and sometimes.
So if you register for VAT, just know you are a typical candidate. Register for IFRS and then do B2B integration.
So the taxman is always somewhere trying to get
because the person who has sold you will report you. I have sold this person's items worth 200 million. So for you sell, enjoying. Remember, when you don't declare, you become the final consumer.
Yeah.
So they will require you to pay the tax. Okay?
Yeah. Does VAT impact the pricing?
I would say no, because if an item is 1 million, it is 1 million. You can't say for me, mine I'm selling it at 1.2. No. VAT doesn't. It doesn't.
It doesn't, huh? Okay.
But if you're a monopoly, you can add something for VAT. But if you're following market prices, be aware not to.
Are there special VAT provisions for foreign businesses opening in Uganda?
No. No.
Totally no.
No.
So it is a no.
Yeah, because it's a supply of goods and services in Uganda. Okay.
Okay, that's understandable now. Then someone was asking, can businesses claim input VAT on purchases?
Yeah, sure.
If so, how?
The claiming is when you're filing your return. Remember, it is output matching input. So you claim it through that VAT return, saying I have brought these items. So if I have sold maybe 100 million and I have brought 200 million, I have an advantage there.
Okay. Oh, wow. Very interesting.
Yes, sure.
It's an interesting topic here for all those that are watching us from wherever you are, especially the SMEs out there. Thanks for watching. We continue with our conversation. We continue with our training. All we want is you to know what you are supposed to do. You must know about taxation if you are to be in business. You must be compliant if you are to be in any business when it comes to oil and gas. And it is the reason that's why CNOOC has really organized this session for you, so that you follow it online and learn, because CNOOC has spent a lot of money paying these consultants to come and teach you and bring in all the expertise they have, so that you learn and know what exactly to do. Because as an agency here, CNOOC, it really needs you to be compliant so that you can do business with it and also benefit as a Ugandan. It's almost like a social responsibility by CNOOC to organize this. So, ladies and gentlemen, if you have questions, please send in your questions. We want to read your questions here. We want to read your questions here so that they can be answered. I see very many of you who are watching this live stream. You can send in your question. Does this mean that you've understood everything? Because we really want Mr. CNOOC to answer your question so that you understand everything as it is very well. Or if we don't see any questions here, maybe Mr. CNOOC can continue with our other topic, so that we can get questions at the end of the session. We can continue with that other topic.
Thank you, Michael.
Yeah.
The final question, the final topic today is withholding tax. As the word goes, withholding tax. How does it come about? When you supply goods to an organized entity, it will withhold at payment. Okay. So it remains with that money, it remits it to URA, and you can consume it later. Okay. Withholding tax is a form of income tax that is withheld at source by a withholding agent upon making payments to a payee. So it is withheld at payment. At payment, not at invoicing, but whenever they are paying you, they remain with some money in their docket so that they can remit to URA. So it is remitted and paid to the taxman. The withholding tax, it's final. It comes full and final payment of income tax. Pay is not subject to further tax on this income. No requirement for payee to file an income tax return for this income. Income is not aggregated with other incomes for chargeable income. No deductions allowed for expenses or losses. No tax refunds for this income. Okay?
Yeah.
So withholding tax, it is in two ways. We have when it is a final tax, and then when it is a credible tax, like you will consume it later. For example, if you supply goods and they withhold your 6%, at the time of paying the other tax we talked about, the income tax, you first consume this 6%, then you pay the remaining 24%. Okay? Yeah. When is this tax withheld? For employment income, when they are paying your salary, they withhold. For goods and services, they can withhold imports. Professional fees. For professional fees, you have to withhold this tax. Even if you are withholding tax exempt or not, you have to withhold. Whenever you're paying your lawyers, your accountants, your auditors, withhold this tax. For interest and dividends, when you're paying out interest, withhold. Rent, management fees, all those ones you have to withhold. Withhold 10% by a resident who purchases assets from non-residents. Okay? Then for commission, you have to withhold 10%. Commission on mobile money, 2% for non-resident tax transporters, and then 5% for non-resident internet service provider. This is a new amendment.
About tax.
Yes.
About
taxing
internet.
Non-internet service providers. For example, if you've applied for Zoom these days, if you pay, they take off the 5%. So you pay more by 5% because they have an obligation to remit that 5%. Okay?
Okay.
So for professional fees, you have to withhold 6%. Okay? Winnings from sporting and pool betting. So if you win your 100 million from which betting company? Global Betting Africa.
Yeah.
They will pay you less, 15%. So you see the rates keep on changing, eh?
Yeah.
For commission, for goods and services, if you supply government, they will not pay you this 6%. It will remain the government.
Okay.
Or other local institutions, they will try to keep that 6% and then they remit it to government. Then when you are importing, this is automatic. People who have imported, 6% is left on the table at customs.
Yeah.
So don't say, why is government mistreating Ugandans? Interest payment, 15% remains on the table. Dividends, 15% remains on the table. International payments, 15% remains on the table. So we've looked at 16, 10, now we're at 15%. Eh?
Now, when you talk about international payments, what is this exactly?
Like, if you're paying to international organizations, for example, if you have a company that is the parent companies are abroad.
Like, for example, when we talk about CNOOC?
Paying, if CNOOC is paying dividends to CNOOC International or CNOOC China, something like that, they have to first deduct the 15%.
What if it is not CNOOC, but it is me paying to CNOOC, the other side?
Yeah, you have to withhold.
Okay.
Yes, you have to. For example, people who have like shares in recently MTN listed.
Yeah.
When MTN is paying you your dividends, it will get up that 15% in their table. For entertainers, these ones, when you're paying them, 15% has to remain.
Okay.
Okay. These entertainers, 15% has to
remain. Entertainers, like for example, we talk about the artists when they have an event somewhere.
Yeah. Whenever that's why you hear them complain. Now government has taken income tax. It has taken VAT. It has taken whatever.
Now let's say we have Ndere Troop heading to Chikuve to perform. Yeah.
You have to withhold.
You withhold.
Okay.
Yes.
International entertainers, the same thing. For example, there was this guy who was held up in Uganda.
Yeah.
You have to pay you have to pay that 15% because the essence of withholding tax, it's like, oh yes, we might not see this person again.
Yeah.
At least you get something before the man runs away.
Okay.
Yes. So, as a withholding tax agent, what is your liability? You have to recover from your payee. So the people you're paying, you have to recover this amount from them. And it takes priority. Even if you're bankrupt, you have to first pay the 16%. Then other creditors can come up. Okay? And if you don't pay their penalties, fines and penalties for non-paying. Yeah, I think that is what I had to share on this tax head. And this is our final presentation.
This has been our final presentation, but now I would like to get back to the production team to give us a small break, and they will come back and engage on a number of issues again. Those with questions, please send in your question, share the link so that everyone out there is sending in their questions, or they see our parting shots in the next 1 hour. Thank you. Let's get back to the production team.
A rig is a group of equipment that we assemble, we test, and then we commission or operationalize to help us dig the wells, have them under control, have them completed, and get them ready for the production phase.
We have built capacity to handle equipment from the ship up to the last mile in a Kingfisher.
The convoys have been in the range of 15 to 20 trucks and driving all the way from Mombasa to Malaba in about 3 days. Then they would come from Malaba to Mukono, spend a night. Then early morning we would set off from Mukono to Hoima.
We have employed Ugandans, so that's a good way of appreciating and saying, yes, it is possible that we Ugandans, we can be involved in this oil and gas, and we perform excellently.
A rig is a group of equipment that we assemble, we test, and then we commission or operationalize to help us dig the wells, have them under control, have them completed, and get them ready for the production phase.
We have built capacity to handle equipment from the ship up to the last mile in a Kingfisher.
The convoys have been in the range of 15 to 20 trucks and driving all the way from Mombasa to Malaba in about 3 days. Then they would come from Malaba to Mukono, spend a night. Then early morning we would set off from Mukono to Hoima.
We have employed Ugandans, so that's a good way of appreciating and saying, yes, it is possible that we Ugandans, we can be involved in this oil and gas, and we perform excellently.
A rig is a group of equipment that we assemble, we test, and then we commission or operationalize to help us dig the wells, have them under control, have them completed, and get them ready for the production phase.
We have built capacity to handle equipment from the ship up to the last mile in a Kingfisher.
The convoys have been in the range of 15 to 20 trucks and driving all the way from Mombasa to Malaba in about 3 days. Then they would come from Malaba to Mukono, spend a night. Then early morning we would set off from Mukono to Hoima.
We have employed Ugandans, so that's a good way of appreciating and saying yes, it is possible that we Ugandans, we can be involved in this oil and gas, and we perform excellently.
A rig is a group of equipment that we assemble, we test, and then we commission or operationalize to help us dig the wells, have them under control, have them completed, and get them ready for the production phase.
We have built capacity to handle equipment from the ship up to the last mile in the Kingfisher.
The convoys have been in the range of 15 to 20 trucks and driving all the way from Mombasa to Malaba in about 3 days. Then they would come from Malaba to Mukono, spend a night. Then early morning we would set off from Mukono to Hoima.
We have employed Ugandans, so that's a good way of appreciating and saying yes, it is possible that we Ugandans, we can be involved in this oil and gas, and we perform excellently.
The Kingfisher oil fields development has evolved, reaching some significant milestones after CNOOC Uganda Limited and its joint venture partners signed the final investment decision. Land for the construction of different facilities was acquired and compensation was fully made. Cash and in-kind compensation, like resettlement houses for all families, were built and handed over to the project-affected persons. Construction commenced for different aspects of the project, leading to the development of facilities such as the camps, well pads, the central processing facility, and feeder lines, followed by the delivery of the rigs and installation. Spudding was done in January 2023. There have been promising drilling outcomes, with 7 wells drilled in pads 2 and 3. Drilling operations, coring and on-site works are continuing, achieving total footage of approximately 23,000 meters. Other noticeable activities include a base station and permanent camp, solar turbine transportation, EPC 3-tank erection work, and EPC 4 pipeline trenching. CNOOC will actively promote the LPG integration plan, which will gradually achieve the strategic transformation towards a green and low-carbon energy supplier. A camp integrated hydropower project has been set up, which will result in carbon dioxide emission reduction by 3,156 tons. CNOOC has continued to contribute to the Belt and Road, people-to-people exchanges, enhancing China-Africa friendship and promoting the building of a community with a shared future for mankind. CNOOC collaborates with various Ugandan universities to enhance graduate employment curriculum design and research. We have signed agreements with several institutions to support scientific research and develop talents in the oil and gas sector. CNOOC, in collaboration with 5 other Chinese companies on the Kingfisher project, spearheaded a drive that led to the donation of $500,000 to upgrade the infrastructure of the Entebbe Welfare School. This is the largest donation to education in Uganda.
On behalf of the Ministry of Education and Sport, I would like to extend my gratitude to CNOOC Uganda Limited and the contractors of Kingfisher oil fields for your commitment to the cause of vulnerable and challenged children.
CNOOC sponsors international scholarships, sending Ugandan students to study in China. Under this program, a total of 11 students have been sponsored and 8 have since graduated and are currently working in the oil and gas industry.
This scholarship to me is a dream come true. I always wanted to receive a first-class education from a good school, and CNOOC has provided me with this opportunity, this once-in-a-lifetime opportunity.
CNOOC focuses on training and certification programs for skills needed in the oil and gas industry, which promotes local employment and strengthens Uganda's logistics and industrial capacity. Over 150 contractors and more than 3,000 individuals have been trained in various oil and gas skills. The company collaborates with local vocational schools to provide welder training, significantly contributing to Uganda's professional welding sector.
They sponsor us who are underdogs and they want to put us somewhere. We thank them a lot. There's nothing much we can give them, but maybe use the skills properly so that they can also feel they have done some impact in the Uganda we have now.
CNOOC Youth Employment Support Program has trained over 350 local youths in various vocational skills, improving their employability and living conditions. These trainings cover welding, heavy truck driving, heavy machinery operation, engineering construction, and other skills needed in the oil and gas field development, as well as driving, tailoring, and hairdressing, among others. CNOOC invests in projects to improve community living standards, such as providing clean drinking water to over 13,000 residents in Buhuka flats, carrying out medical camps and building resettlement houses with modern amenities for 56 households. We have also invested $620,000 in maintaining critical roads and enhancing public safety. Livelihood restoration programs include donating livestock and teaching scientific breeding methods. We also work closely with the Confucius Institute of Makerere University, supporting events like the Chinese Bridge Competition and the Sound in My Heart Chinese Song Competition. CNOOC also organizes activities to celebrate Chinese culture, such as the Spring Festival. These efforts enrich communication and foster mutual understanding between China and Uganda.
CNOOC Uganda Limited is committed to education and capacity building to fulfill its vision of energy for Uganda.
Enterprise Development Program, which is aiming at training all those in SMEs to know what they are supposed to do, what they are meant to do when it comes to doing business with CNOOC and any other oil related agencies. So we have been discussing tax. Since yesterday, we have been discussing issues that are related with compliance, that are teaching you that you have to be compliant for you to do business within a serious entity like CNOOC. And here today we have discussed quite a number of topics. We have heard from Mr. Senoga, who has been lecturing us about VAT, about income tax, and quite a number of issues that we have learned. And our
The Kingfisher oil fields development has evolved, reaching some significant milestones after CNOOC Uganda Limited and its joint venture partners signed the final investment decision Land for the construction of different facilities was acquired and compensation was fully made. Cash and in-kind compensation, like resettlement houses for all families, were built and handed over to the project-affected persons. Construction commenced for different aspects of the project, leading to the development of facilities such as that, the central processing facility and feeder lines, followed by the delivery of the rigs and installation. Spudding was done in 2023. There have been promising drilling outcomes with drilled in pads 2 and
driving
3.
All the way from Mombasa to Ba in about 3 days. Then they would come from Malawi, spend a night. Then
we have employed Uganda, so that's a good way of appreciating and saying possible that we Ugandans, we can be involved in this oil and gas, and we perform excellently.
A group of equipment that we assemble, we test, and then help us dig the wells, have them under control, have them completed, and get for the production phase.
Equipment from the ship up to the last mile in Kingfisher.
Of 20 trucks and driving all the way from Mombasa to Malaba in about 3 days. Then they would go over to Mukono, spend a night, and would set off from Mukono to Hoima.
Have employed plus appreciating it is possible that we Ugandans, we can be involved in this oil and gas, and
is of equipment assemble, we test, we rationalize to help us dig the wells, have them under, have them and get them ready.
We have built capacity to handle it from the ship up to the last mile in the Kingfisher.
The convoy in the range of 15 to 20 and driving all the way from Mombasa to Malaba about 3 days. Then they would come from Malaba to Mukono, spend a night, then early morning would set off from there.
check. Employed. That's a good.
That's the same question.
Yes, it is possible that we Ugandans, yes, we perform excellently.
A rig is a group of equipment that we test and we commission or operationalize to help us dig the well, have them completed.
We have built capacity from the ship up to the last mile.
The convoys have been in the trucks and driving all the way from Mombasa to Malaba about 3 days. Then they would come from Malaba to spend a night. Then
welcome back from the break. I hope there is quite a lot that you are learning from this training, and we will continuing with our questions. I see very many people are engaging us on YouTube, and Gloria Nabweteme asked her question and was responded to. Then we had Nayevale Hilda who was asking who is responsible for deducting and paying withholding tax?
The person paying you.
The person paying you, like your boss.
Your supplier.
Your supplier. Okay.
If you're an employee, your boss.
Okay. Okay. Nayevale Hilda, it is your boss if you are an employee.
However, they have to give you a certificate. It's called the withholding tax certificate. Yes.
But how often do people receive certificates? I've never heard of anyone receiving.
They have to receive. If you are to claim when you're putting in that return, all those certificates have to be listed in that template. It shows you who withheld, what is the certificate number, date and amount.
Okay. This is very new to me. We are here all to learn, and this is very, very, very new information that we are learning. CNOOC Lands says, what are the consequences of failing to withhold the tax when required?
There are fines and penalties or imprisonment.
Yeah.
Those are the consequences.
Ivan Masengele, thanks for joining us. You were here the whole of yesterday, so you are here again today. Ivan Masengele is asking, what is the difference between zero-rated and exempt goods? I remember you answered that very well, but maybe Ivan came in late.
Zero-rated, it is a taxable supply that is charged 0%.
Ivan, it is charged 0%. Maybe Ivan is getting some confusion when it comes to the 0%.
And exempt, you don't charge anything. Actually, it doesn't.
The other one is charged 0%.
And it is a taxable supply.
Taxable supply. And
exempt is not a taxable supply.
Okay. I hope, Ivan, you have understood. If you've not understood, ask for more clarification right here. Then Ivan had another question. Is there a threshold for someone to start withholding?
Yes, if it is below 1 million, you can go away with it. But when it's above 1 million, 1 million and above, the hammer will start.
Okay.
If a supply is below 1 million, you can let those people go. But when it's above 1 million, withhold.
Like, for example, when I'm from my garden, carry my stuff, supply someone.
Below maybe 400, 200, 100.
What if it is 1 million and above, but I'm not registered anywhere?
We try to withhold. Because the withholding tax regime is a catch 24 point. It is where we can get something from you, regardless of your status.
Patra Allison is having a question here. Can I pay my VAT liability in installments?
If you notify the commissioner.
If you notify the commission that you are a commissioner. That I'll be paying.
That I have these challenges, but I'm so much willing. It is called the payment plan. I'm so much willing, but I will pay this 100 million in 6 months.
Okay,
for the officers, you pay in 4 months. But when the period is longer than that, you have to write to the commissioner. Then they give you what we call a payment plan. So you can pay that amount in the entire year.
So the payment plan is according to you or according to them?
You suggest what you can afford.
Okay.
You can say maybe I'll pay 50%. Then I'll be paying 25, depending on your cash flows.
We have Gloria Naweteme. Gloria is seriously stuck on this issue. I think Gloria is a person who is always very busy buying this and the other. So she wants to know. She says that she's from Mukono. What goods and services are tax exempt?
These are financial services.
Since Gloria is a lady, maybe let's talk about goods that ladies may need that are tax exempt.
Santaleware.
Only.
Yes, Santaleware is tax exempt.
What about those lotions?
I know they are not pleased. They are not pleased.
Okay.
They are not because you know, the importance of tax is to redistribute income. So for you, when you are paying to look good,
okay,
you should bear the tax.
So ladies out there should pay some tax to look good.
Yes.
Okay.
But for sanitary wares, good to go. Health services, financial services, the bundling that you're talking about, medical supplies.
When you talk about health services, you mean when I start up a hospital, I don't pay anything?
You don't pay VAT.
Okay. Chisachi John Davis is asking the same question. What documentation is required for VAT claims?
Let me repeat it.
Yeah.
IFRS tax invoice.
So IFRS tax invoice is the one that is
and by the way, nowadays, previously we used to fill in those returns, you specify all your sales. Nowadays it is not the case. At end month everything is populated, you just go and click, then the return populates itself.
So what you mean IFRS is good for all these people that are in business? So they should embrace it?
Yes.
Okay. So an expert has told us that we should all embrace IFRS. So you people out there,
however, it is a sour fact.
Okay. It's a sour fact. So people out there who don't understand these things, especially those in businesses, those in SMEs, please, the expert has told you IFRS is very important. Yeah, it's the first point when we talk about compliance. We have Gloria Nabwetem has been answered. Gloria, the sanitary wares, you won't pay anything. Chisache Don Davis has also been answered. Chisache also has is watching from Chambo Gobanda. What role does tax identification number play in income? I think that
basically
was answered,
a tax identification number is a gateway to a tax man.
Yeah.
So it is what you use to communicate your incomes and thereafter your tax payable. So it has all the information, amount of taxes you've paid, fines and penalties and all that. And you can know about your status through looking at what we call a tax ledger. That thing has even hidden taxes people don't know of.
Okay. We have Don Seba. Don Seba is saying that under the recent VAT amendments, how will employers value donations and the gifts they give to their employees for them to be able to remit the tax to URA?
For accountants, we have an entire standard.
Yeah.
It's a fair value standard. What is it? IFRS 13, something like that. So anything can be valid. For example, if my employer gives me a television, it is available on the market. We can just compare, then we see how much.
So what they mean here, because I think some people need to understand these recent VAT amendments. When your boss decides to buy you like some flowers, maybe flowers. So do they mean that you have to pay some VAT for the flowers?
At end month. When they're computing your pay.
When my salary comes, someone will deduct some money for the flowers I received from my boss. Is this kind of... Anyway, that is it. They have told you.
But that is what your MPs passed.
Okay.
I told you I'm not the owner of the vehicle.
The
mine is to guide you on please tighten your seat belt, drink water, get exercise as well, moving. Yeah.
So I think the problem here is very many people don't understand these they don't understand these laws very well. I think it's the reason that's why you see very many will be very angered, not knowing that maybe the amendments are good or bad. But on this amendment of your boss giving you something and then at the end of the month,
it was a contagious. By the way, my professional body advised not to
to
amend it, but it was passed. Yeah.
Okay, we have Tasha Hari. Tasha Hari is still asking about the role of teens. Tasha, do you have a teen? Let me hope you have one. So Tasha wants to know again the role of a teen.
It's called a tax identification number.
Yeah.
It is one you use to communicate that one, you are an adult in Uganda, and then two, you are paying your taxes. Without it, you can't pay any tax. You can't import any good, because when you're importing, they will always ask you for your TIN. If you go to government parastatals, many of them will ask you for your TIN to look at you as if, are you a responsible citizen or not?
Okay. Then we have Don Seba again. Kindly also clarify more on VAT on auctioned goods under the recent tax amendment.
It's they introduced VAT on auctioned goods.
Yeah.
It was last year, but now it was reinforced again. So whenever you buy maybe like a table at an auction, you have to be charged VAT. And then is it the auctioner or something? Someone pays.
So everything that is auctioned,
yes,
when you buy it,
when it is a standard rated supply, so you have to know, are they selling me standard rated? Are they selling me exempt? Are they saying me zero rated?
Okay. I think you've been answered. Seba. And then we have Nora Bab. Who is eligible for IFRS taxation?
I don't know anything called IFRS taxation. She's combining two things.
Nora is introducing something new, maybe.
Yeah, I think it's a new concept. There's nothing like IFRS taxation.
Yeah.
However, we have IFRS as a mechanism to beef up compliance. For example, you can never do anything with a VAT when you're not IFRS what? Registered. So there's nothing like IFRS tax. So tomorrow we shall have slides on IFRS as a topic, but it's not a tax.
Okay.
It's just a mechanism. Kindly, it's not a tax.
Oh, that will be very
never after IFRS tax.
So there is no IFRS tax.
Never be charged IFRS tax.
IFRS is not a tax.
Don't allow someone to tell you we are overcharging you because of IFRS tax.
Okay, that is understandable. But then
at least recently I've not checked.
Nora continues and says, do engineering, consultancy, and construction companies go for IFRS?
Sure. If you're producing invoices, you should be there.
So whoever is producing invoices, you must be going in for IFRS. Nyazi Abel. I think
by the way, another difference between exempt and zero rated.
Yeah.
For example, you are selling 150 million items that are zero rated.
Yeah.
You're supposed to file. You are supposed to apply for VAT. Yeah. But if you're selling 150 that are exempt, you're not supposed to apply for VAT registration. You get where the difference is.
Okay.
Yes.
By the way, all our viewers, it's always very important and very good when you tell us where you are watching us from. Nora, Dani, Chisachi. Yeah, it will be very interesting when we know where you people are and where you are working. If you are working with an SME, it will be very important for us to know that. We have Nyanzi Abel here. Can businesses claim input VAT on purchases?
Yeah, sure.
Okay.
Even if it is purchasing equipment or assets, you claim it.
Wanyana Lydia here says the training is very timely. The tax regulations are complicated. Maybe they are not complicated, but maybe taxation itself is hard to understand. But when you have experts here, I think you can understand. So Wanyana says
just like any field, it is very hard to understand law.
Exactly.
It's very, yeah, it's I think it's like you can't treat yourself, however simple the issue can be. So
Yeah, Don Seba says here, what is the threshold for VAT and the recent amendments?
threshold is below 150 million.
Continue sending in your questions, and here I have questions also concerning concerning withholding tax. What rates apply for withholding tax on salaries?
Salaries.
Yeah.
Salaries, we use the payee rates, the individual tax rates.
Okay.
If you're a resident, other rates will apply. If you're not,
don't you think this can confuse some of our viewers when we say they are supposed to pay payee and then they're supposed to pay withholding tax?
Yeah. Withholding tax is payee is a withholding tax item, okay, or a category of withholding tax. Only that it is payable in an employee-employer relationship. Okay? Yeah, that's it.
So, people would like to know this clearly. When they are deducting payee, they are not deducting anything else called withholding tax?
No. Actually, payee is withholding tax.
Okay.
Okay? So
it is one thing, withholding tax. Payee is withholding tax.
Is withholding tax.
Okay.
Withheld at source. You remember the major determinant of withholding tax is to be deducted at source. Don't go anywhere. That is why you never see that payee.
Okay.
Yes.
How can individuals or businesses claim credit for withholding tax paid?
Yeah, by first of all, whoever withheld has to give you a certificate.
Okay.
Then you can claim, and also it is on your account, on your ledger.
You've been talking about that issue of the certificate, and it is kind of being so complicated.
No, you tell the person, if you've not given me my 6%, give me a certificate. If they don't give you, tell him, give me my.
So what is the importance of this certificate?
You will use it to claim when you are paying income tax. You will pay less this 6% you already have on your account.
Okay.
Yes.
I think these are things that can be well understood by people who are in tax audit and all that, consultants.
You are bosses, you should know this.
Yeah, because in any simple company, like a small SME that doesn't have money to pay a consultant, I don't think they do all this. I don't think they even understand all this.
Yes, some don't know that.
Yeah, then we have Mutesi Janet here. Mutesi is asking, are there different withholding tax rates for dividends?
Yeah, dividends
and
is
interest?
15%.
Dividend
interest is 15%.
They're all 15%. Okay.
Then for supplies, 6%. Paying to professionals, 6%. So it all depends on which type we are talking about here.
Okay.
But it's advisable when you're dealing with professionals, withhold regardless.
Then someone here, Magezi Chirinjo, what exemptions or reliefs are available for withholding tax?
Exemptions or reliefs? The only exemption, if you are supplying below 1 million, you are somehow exempted.
Okay, if you are supplying below,
leave that person to go.
And then someone here is asking, what are the consequences of failing to withhold the tax when required?
That one I answered: fines, penalties, or imprisonment.
Okay. As we wait for more questions, I don't know whether production has something for us, because I see we are being joined by a very good number of people right here, and I have very many questions, but I think we'll give Mr. Senoga a minute, then we will be back so that he answers the rest of the question.
Thank you.
Nora.
Yeah.
A rig is that we are testing commissions, dig, have them under control, completed them ready for the production phase.
We have built equipment up to mile in a Kingfisher.
In the range of 15 to 20 trucks and driving all the way to Malaba in about 3 days. Mukono, spend a night, then early morning would set off from Mukono to Hoima.
Ugandans. So that's a good way of appreciating and saying, yes, it is possible that we Ugandans, we can be involved in this oil and gas, and we perform excellently.
A group of equipment that we assemble, we commission to help the wells, have them under control, have them completed, and get them ready for the production phase.
Build capacity from the ship, the Kingfisher.
The convoys have been in the range of 50 trucks and driving all the way to Malaba in about 3 days. Malaba to Mukono, spend a night, then early morning.
We have employed Ugandans, so that's a good way of and saying yes, that we can be this oil and gas, and we perform excellent.
Rig is a group of equipment that we, and then we operationalize to help us wells, have them under control, have them complete, and get them ready phase.
We have built to handle equipment from the ship up to the last mile in the Fisher.
The convoys have been in the range of 15 to 20 trucks and driving all the way from Mombasa to Malaba. Then they would come from Malaba to spend a night, then early morning would from Mukono to Hoima.
Employed Ugandans, that's a good way of appreciating. Yes, it is possible. We Ugandans, we can be involved in oil and gas, and we perform excellently.
A rig is a group of equipment that we assemble, and then fish the wells, have them completed, and get them ready for the production phase.
We have to handle equipment, the ship last mile in a Kingfisher.
In the range of 15 to 20 trucks and driving all the way from Mombasa to Malaba 3 days. Spend a night, then early morning would set off from Mukono to Hoima.
We have employed Ugandans, so that's a good way of appreciating and saying yes, it's possible that we Ugandans, we can in this oil and form excellently.
A rig is a group of equipment that we test and then we commission or operationalize, have them under control, have them completed, ready for the production phase.
Capacity to handle the ship up to the last fisher.
The convoys have been in the trucks and driving all the way from Mombasa in about 3 days. Then they would come from Malaba to Mukono, spend a night. Then early morning we would set off from Mukono to Hoima.
We have employed Ugandans. That's a good getting and saying it is possible that we Ugandans be involved in oil and gas and we perform excellently.
Rig is a then we commission or operationalize, dig the wells, have them under control, have them completed and get them the production phase.
To handle the ship up to the last kingfish.
The convoys have been in the range of 15 to 20 trucks driving to Malaba, and they would come from Malaba to night. Then early morning we would set Hoima.
We have employed Ugandans, so that's good saying yes that we Uganda in this oil and gas and we perform excellently.
A group that we test and then we commission or operationalize to help us dig the wells, have them under control, have them completed, and get them ready.
Build capacity, equipment, the ship up to the last mile in Asia.
The convoys have been in the trucks and driving all the way from Mombasa. Then early morning we would set off from Mukono to Hoima.
We have employed Ugandans. Appreciating and saying yes, it is possible that we Ugandans and gas and we perform excellently.
A rig that we test and then is to help us dig the wells, have them completed and get for the production phase.
We have built capacity to handle equipment.
Our online enterprise development program sponsored by CNOOC Uganda. For those that know CNOOC, it is doing a very, very good job down there in Chikube. And as we are waiting for our first oil, it is really doing a very recommendable job here. It has employed very many Ugandan SMEs benefiting from the works that CNOOC is doing out there. Very many people have been employed by CNOOC. So as Ugandans, we are just so happy that we have CNOOC here in Uganda. CNOOC has really sponsored this training, and it thought about this because there are very many SMEs that are out there, and they need information. They really need to understand what to do for them to be part of the oil and gas sector, to do business with companies in the oil and gas sector. And here we are in this training. It's a free training to educate you on a number of issues. And today we have Mr. Robert Senono here, who has been lecturing us about a number of tax-related issues. We have learned about income tax. He has been telling us about quite a number of issues. And here on our YouTube, we have a number of questions from our viewers that Mr. Senoga will answer. We have Desire Kamanzi. Desire Kamanzi works with Adimatha Security Services and Fortitude Business Consultants. Oh, Desire just told us about where he works. He didn't ask or even appreciate us, but I think you, in your heart, you have already appreciated what is happening here, and you have appreciated CNOOC.
That's my fellow consultants.
Okay.
I'm happy to see consultants.
Okay.
Watching.
So Desire is here watching us live. Shira Kasebili is asking a question. Who is responsible for deducting and paying withholding tax? I think Shira also joined us somehow late, but I think this was answered. But for emphasis,
the person paying you is the one who's supposed to withhold.
The person paying you. So
for example, if you supply goods to CNOOC, CNOOC, when CNOOC is paying you, it has to pay you less, 6%. Yeah.
So the person paying you is the very person who is supposed to be collecting that withholding tax. So all in all, you mean that all of us are taxmen and women, because we keep collecting some tax from.
Yeah, it depends if that person is withholding tax exempt. Those ones have a total duty to withhold and pay withholding tax. However, any other person can withhold payments if they are paying to special people like consultants, public entertainers. Those ones they have to withhold and then remit something to the tax board. That return can go through even if you're not VAT withholding tax exempt.
Okay. I hear some more questions coming in. Someone is talking about VAT refund claims. Where do they make these claims? VAT refund claims.
VAT refund claims. Who's that? Where does he work?
This one is Seba still. Yeah, he has not told us where he works, but he wants to know about VAT refund claim.
VAT refund claims. We nowadays have what we call withholding VAT. So on top of the 6%, we have the 18%. For example, if you're not VAT registered, but you've supplied standard rated goods, they will pay you again less the 18%. Okay? Yeah, so we have that, and that is where now those refunds start from.
Nora works with MBW Consulting. It's a civil engineering firm, but currently at Kabale International Airport Project.
Wow.
So Nora is working with Kabale International Airport Project. Desire Kamanzi says the presentation is highly appreciated.
Thank you.
Then Ivan Masengele comes in here again. If I failed withholding this month, the following month I don't withhold, am I supposed to fail, or I only fail when I withhold?
If you are withholding tax exempt, you have to file regardless.
Okay.
But if you are not, you only file for those months you've withheld. Yeah.
Okay.
Because when you apply for withholding tax exemption, you are committing yourself that I will be remitting money on your behalf. But if you are not VAT, if you are not withholding tax exempt, you can follow.
I have some other questions here, and these people say they need answers to their questions. Someone here, let me get it. This one is called Natasha Mariam.
Yes, Mariam.
Natasha Mariam is asking that you explain more about this issue of if you don't have EFRIS, it is very hard for you to be monitored, and it is hard for you to pay the taxes. You don't have EFRIS. So it's like as if Natasha wants to know if it is better for her not to use EFRIS so that it's not monitored.
No, you can be monitored anyway.
Even
there are very many mechanisms. For example, that withholding tax, that is also a mechanism that can be used to monitor you.
Okay.
Even if you don't give out EFRIS invoice, for example, the consultants, your customers will submit returns to URA, showing that we have a consultancy fee may be 20 million. Then URA will ask them, who's this consultant? They give you a name. So there are very many mechanisms of being monitored. Very many. Remember, it's an all value chain. Yeah. You can be, for example, you can spend like 10 years hiding, but one year you get maybe a deal with CNOOC. You supply goods worth 1 billion. Yet for you've been filing returns of maybe 100 million or 50. So it is encouraged that you comply.
Okay.
Yes. Get yourself encouraged to comply.
Someone has a question here that is talking about international taxation and the digital economy. With the rise of the digital economy, how can countries effectively tax international corporations that do not have a physical presence within their borders?
For example, I'll give you I was explaining to you about Zoom.
Yeah.
And such international payments are very easy to be taxed because their payments are always online. That's why when we're purchasing from them, they will add a certain tax, and then they remit it to URA.
Okay.
Of course, they might not be having offices, but they have consultants who manage their accounts on their behalf. So, yeah.
Okay. Then someone is asking, should income from capital gains be taxed at the same rate as regular income?
Yeah, sure.
How would this change impact investment behavior and income inequality?
Capital gains are basically this is income you get on disposing of business assets. Okay, that one is taxed at a rate of 30%. So it tries to, the importance of taxation. One of the several importances is to redistribute income.
Yeah.
And also for fiscal planning. Yeah, so government uses taxation as a mechanism to deal with things like inflation, all that. So it's a mechanism, and the setters of these laws, they are aware. That's why these laws change every year. Each and every year, they see maybe people have poured money in this area, let's tax it, then we redistribute, and then the economy is balanced to avoid the Dutch syndrome.
There are I get it that there are some loopholes, tax avoidance loopholes. What are some of the common loopholes that individuals and corporations use to reduce tax liabilities?
I think that is a big subject. We shall give them the email for Vectra.
Okay.
Then they can send through.
Okay. Then
if they contact Vectra, they can easily locate me.
Okay. Then there is a question here, which is someone is trying to bring into issues tax credits versus deduction. Which is more effective for achieving progressive taxation?
Tax credits versus
deductions. I think these are very technical questions.
You see, there are some things that need a lot of debate. Yes.
Then someone is, how effective are tax incentives in promoting investment?
They do a lot. For example, the industrial parks.
Yeah.
Recently I was in Imbale, but I saw a big tax park. So such incentives are really good. They boost investments, and then they redistribute income.
Then there is a question that I was asking you.
We're going for a break, then we come back to this presentation.
Let's proceed. Someone was asking about double taxation. Double taxation applies more to international companies, and we have double taxation agreements with different companies. So if with different countries, so if you get income from those countries and they have already taxed you, and we have a double taxation agreement, yeah, we shall just tax the balance.
Okay.
Yeah.
So here is where you explain about double taxation.
No, basically double taxation is out of scope because since I was thinking about SMEs, but someone asked about incentives.
Yeah.
All these ones are incentives to boost compliance. Like 10 years for exporting, scientific research, training, and mineral exploration. For example, people who look for minerals and all those things, trainings, those ones exempt. If you are importing plant and equipment, the exemptions on custom duty on importation, that can be deferred and potential waiver. If you apply to the commissioner, it's not a given. You have to show what you're importing and where you're going to use it. And also, if you employ 5% of people with disabilities, there is this 2% on your income tax. It can be deducted because you are supporting the economy somehow.
Okay.
And also, if you look at the detailed tax deductions, your accounting depreciation is not allowed. Okay?
Yeah.
What we allow is called wear and tear. Wear and tear are these percentages. A taxman will allow 40% for your computers. Okay? Yet for you as a depreciation person, you might be depreciating maybe 25%. Then startup expenses. These ones, I told you, we'll break it down in a period of 4 years. Each year you take 25%, 25%, 25%. Then interest is also allowed, but if it is for a group, we talk only 30%. Okay?
Okay.
Then the rest can be carried forward. Then I still warn you on non-business expenses. These ones are not included in your tax returns. Okay? Yeah. So, any questions?
I think people are still sending in more questions, but we wanted us to take more of our time learning and teaching them. Then someone here says, why do some economists argue for a flat tax rate instead of a progressive tax system?
Wow.
What are the potential economic and social impacts of each approach?
I think that person is an economist, right?
I think. That's why he's bringing in
the
arguments,
progression and all that.
Yeah.
I think that is out of scope. Since we are dealing with SMEs.
Yeah.
That is a policy question.
Then here I have a question. Maybe you can briefly elaborate about this issue, whether there are any ways to reduce tax bill, because very many people keep asking, how can I reduce my tax bill? Because they see a lot of their money is going into paying
tax bill can be reduced there.
Okay.
Deductibility of expenses. So expenses incurred in production of income, they are the ones that you can use to reduce your tax bill. Okay?
Okay.
Yeah, that is now where you can specifically utilize. So for you, if you can earn business expenses, automatically your tax bill will be high. But if you incur less, if you incur more business taxes, your tax bill will go down. So there's no shortcut. So there's no way of like someone saying, how can I reduce my tax bill illegally? It has to be within the law.
Then someone wants to know, where does the tax money go and how does it benefit me?
Another question.
This is what someone is asking. Where then?
As I told you, we are not the owners of the bus.
Yeah.
The bus is owned by someone. The driver is URA. Ours is to tell you how to survive in the bus. Where the money goes and all that, I think they have seen social services.
We are trying to summarize. So whoever is online and you have any questions that you want to be answered by the expert here, please send in your questions so that they get answered in the next 10 minutes because we will be leaving this live stream in the next few minutes. So for any questions, please send in your questions so that they are answered. Someone is also asking a question that was, I think, already answered. What happens if I miss the deadline for filing my tax return?
What happens? You have to file, then you wait to pay the penalty.
Okay. So a penalty is a must. You can't wait to the commission and plead.
Yeah, nowadays there are recent amendments where they waive off such penalties for previous years, but not this current year. So whenever you miss a deadline, just pay.
Okay.
Just file on that date because I told you now every month you have to pay 200. So whenever you wait too long, the more penalties you will get.
Okay. Now, Mr. Robert, I want you to just give a highlight about these three topics that we have been discussing and highlight what you think is very important for these SMEs, what you consider as very important, those points that they should give all their attention if they are to survive when it comes to business and operation.
Yeah, for business income or income tax, what I consider the most takeaway for businesses is the presumptive tax for small businesses. There's no need for you going through the hassle of filing returns and all, making books of accounts, yet there is a way you can just estimate and file your return. That is what I encourage for income tax.
Okay.
And also too, you have to spend business money on business expenses you can explain, and also you should properly document your work. Like you should document out the transaction flow to avoid fines and penalties. And then finally, you should seek guidance or listen to any new tax changes, because these are, when they are reading the budget, all the recent tax changes are in there. You can just get that speech or listen to it, then know how the recently passed taxes are going to benefit you. Then for VAT, if you're above 150 million, don't wait for the tax man, because that person is hard. Go and register for VAT, apply for e-freeze, and be using e-freeze for your business. Don't wait for that person to come to you. Then for withholding tax, where necessary withhold your tax, especially when you're dealing with professionals.
Okay.
Because that expense has a lot of debate. It is a business expense, yes, but when you don't withhold at payment, it becomes a problem. Yeah. So those are the main takeaways from my discussion, from our three topics we had today.
Okay. Those are the takeaways from Mr. Robert. Remember, it's the online enterprise development program proudly sponsored by CNOOC. And the reason that's why it was organized is that it is CNOOC wants these SMEs to understand how to operate when it comes to oil and gas and dealing with any companies that are in that sector. We shall be having this training for the next 8 days. Today is day 2. Yesterday we started with tax, and today we are still on tax. And we will have branding and marketing some other day, and we'll tackle quite a number of issues, human resource. A number of issues will be tackled during our 9 days. And I just urge you to always keep here follow the link, get the link, share it everywhere, subscribe to this YouTube, so that you don't miss out on anything. We start at 9 a.m. every day, and our live stream always ends at midday, and we'll be bringing you quite a number of experts in all these fields. Experts are available, and they are here to teach you. Ask as many questions as you want, because the reason as why CNOOC organized this is because they want you to learn something. They want you to get the knowledge that you require. Like, for example, we've been talking about tax exemptions. We have been talking about payee. So for you people who are working out there, you need to know, are you supposed to be paying taxes? Who is supposed to be getting taxes from you? Are you supposed to be paying payee? All that information is very relevant, and it really helps you out there. Get the information, share it with everyone, because this is information that you cannot get from very many agencies that are concerned, but here you are getting the information, and these experts have been paid to come and give you expert information that you really need. You can even engage us offline. We have emails, we have our numbers. You can engage us offline. You can even send in your questions. You can even send in your inquiries in the comment section of this YouTube. In summary, Mr. Robert, because tomorrow we shall still be talking about taxes. EFRIS. So tomorrow we'll be talking about EFRIS. Everyone wants to know about EFRIS and business quality.
And auditing.
So we shall be learning about the quality of business. What quality of business do you really need? Do you really need EFRIS? Is EFRIS important to you? You know, this topic has been around for quite some time, and I think very many people still never understood it very well. So tomorrow at exactly 9, Mr. Robert will be lecturing us about EFRIS. EFRIS is a very, 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 very serious topic that everyone needs to be here watching and listening to, because it will give you insights. You'll learn, you'll understand what EFRIS is. Some of you have been sending in here your questions, and you're like, are you about EFRIS taxes? Mr. Senoga says there's nothing like an EFRIS tax. And for you out there, maybe someone told you EFRIS is a tax. That's why I have issues downtown there that our traders are complaining. They're up and down, up in arms, complaining about EFRIS, which isn't even a tax. The expert here says that it is the easiest way for you to track your taxes, how you are paying them. It's a documentation, basically documentation about what you are about how you are paying in your taxes. So Mr. Senoga will be here tomorrow to lecture us about EFRIS and quality of business, because what we are in is business. How do we have to deal with CNOOC? What kind of businesses are we supposed to present to CNOOC? And you know, CNOOC means quality. It will always deal with the people who have quality. Quality. They consider quality. It's the reason that's why they had to organize this. So, in summary, I will request Mr. Senoga to, in his parting shots, to briefly give us a statement on these issues. Traders, let's say, are those in businesses, are these taxes very important to these people in businesses? And if they pay tax, what should they expect in turn after paying their taxes? Does this help them boost their businesses? Does it create an environment that is good for their businesses? I want you to end with that, so that people understand that paying tax is not a burden. But paying tax is important. It helps us in one way or the other. That's what I want you to conclude with.
Thank you so much, Michael. Paying tax, it is good. It is the best. Because for you to transact with serious organizations, you need to have what we call a tax clearance certificate. Okay? So if you don't have a tax clearance certificate, you will miss out on business opportunities. Your business will remain a small SME from time to time. So it is encouraged that you apply and pay taxes to ensure that you're a good citizen. And also it creates a sense of responsibility. If you've paid taxes, I don't think you can litter in drainage channels, because you know, oh, it's my money that is going to suffer. So you should pay taxes. But for as a business, it is good because it helps you to manage compliance with the tax regulations. So you will not be running from authorities. And finally, it helps to manage your reputation. It saves you from reputation problems. Remember, reputation is what you have. So when you pay your taxes, your reputation will be high, and you have high esteem, and you have a talking point where you can start from in case there's any debate. Okay? So it is important that you pay your taxes. And for you to grow your business, it needs when you're paying taxes. Yeah. Because nowadays, even things as simple as opening up a bank account, at least you need a team. Very soon they will also start asking for tax clearance certificates. So it is important. There's no way out, but for us to embrace tax regimes and start paying. So utilize each and every dot. Utilize each and every advantage for you to pay necessary taxes.
So, ladies and gentlemen, what he's saying is paying tax is very important. Very, very important. So we should make sure that we all pay our taxes so that we are compliant. Compliance matters, and compliance is very important when it comes to doing business. So finally, I would like to end our today's session. I thank you all for following us here live, for dedicating your 3 hours watching us here. I thank those that have been participating online. I see very many of you have been participating online. I thank you all for being here. Here I can see quite a number of you guys have joined us when we are almost concluding. Not even almost, you have joined us when we are concluding. But I thank you for joining. And maybe tomorrow you'll be here as early as 9, because tomorrow we shall be tackling a very serious topic, which is FLIS. We all need to know why FLIS, and we shall be also tackling another serious issue called business quality, the quality of business. So tomorrow we shall start at exactly 9, and we shall do it for 3 hours up to midday. I thank those that have been here, those that have been live watching us, like Nora, Desire Kamanzi, Shira Kasemili, Ivan Masengele, Don Sebo, Wanyana Lydia, Nyazi Abed, Tasha Hari, Chisache John Davis, Gloria Nabweteme, Patra Alson, and very many others, Enoch Alans, very many others. We thank you for watching this. I know people have been watching us from the different SMEs. You know, you might find some people, they may be like 5 watching on us on the same gadget. So all those that are on some gadget watching us live, we thank you for being here. Let's meet tomorrow, same time, and we discuss this. We thank CNOOC for this opportunity that it is giving to all these Ugandans. This online enterprise development program is going to help very many of you. By the end of our 9 days, I'm sure many of you will be giving testimonies. Many of you will be appreciating CNOOC, and many of you will be saying, yeah, this is the right thing Vectra has organized for us. So I thank you. Thanks for being with us. Have a nice day.
For the production phase.
We have built capacity to handle equipment from the ship up to the last mile in a Kingfisher.
The convoys have been in the range of 15 to 20 trucks and driving all the way from Mombasa to Malaba in about 3 days. Then they would come from Malaba to Mukono, spend a night, then early morning would set off from Mukono to Hoima.
We have employed Ugandans, so that's a good way of appreciating and saying, yes, it is possible that we Ugandans, we can be involved in this oil and gas, and we perform excellently.
A rig is a group of equipment that we assemble, we test, and then we commission or operationalize to help us dig the wells, have them under control, have them completed, and get them ready for the production phase.
We have built capacity to handle equipment from the ship up to the last mile in a Kingfisher.
The convoys have been in the range of 15 to 20 trucks and driving all the way from Mombasa to Malaba in about 3 days. Then they would come from Malaba to Mukono, spend a night, then early morning would set off from Mukono to Hoima.
We have employed Ugandans, so that's a good way of appreciating and saying, yes, it is possible that we Ugandans, we can be involved in this oil and gas, and we perform excellently.